Welcome back to Soar Financially, where we discuss the macro to understand the micro. My name is Kai Hoffmann. I'm the @JR Mining guy on Twitter and the CEO of the Soar Financial Group, and I really appreciate you joining us here for another interesting discussion. We have Lynette Zang joining us again. She's the Chief Market Analyst over at ITM Trading, and she was a fantastic guest back in January when we hosted her in our studio in Vancouver. One of the most engaging and fun conversations I've had here on this channel. We've got some amazing feedback on the conversation as well, and I have no idea why it took almost 11 months to get her back on the program, or 10 months actually, right? Time for a market recap. The year has been fairly long. It actually, like, the longer November is, like, the longer it feels, maybe because the days are getting longer here as well. But it has been a bit of I wouldn't say a struggle this year, but it's been an interesting and challenging year. Time to bring Lynette on the screen here. Lynette, it's great to see you again. Thank you so much for joining us. I'm looking forward to this.
Oh, me too. And I'm so glad to be here too. I don't know why it's taken so long, but
We need to do
we
this
can
more
fix
often.
that.
Absolutely.
Absolutely.
Like the fun we had in January, we need to.
Yeah.
I need to have more fun in my life. So, um, Lynette, let's start talking shop here a bit. Let's start with the state of the economy. Where are we at right now? Let's use that sort of as a gateway question here to a lot of things, as a can opener. How are we doing, Lynette?
Well, the economy in general, and I'll speak on a global basis for a minute, is not doing great. And yet it appears that all of the central bankers, or most of the central bankers globally, have concluded their rate rises. So we still have to see the impact on that, but certainly the markets are cheering that.
Absolutely. So, no, I was just making note. Like, is one of the questions we could talk about is actually a race to the pivot, as well. When you say
Mhm.
concluded their rate hikes, like, what are the indicators for that? Like, why have they stopped? Has the economy really stopped dead in its tracks?
Well, the economy has not stopped dead in its tracks, but there are so many cracks that are showing, especially in the banking sector, that I think that the central bankers fear that they may have gone a bit too far. And so they're pausing to see what's going to happen. And I think that's primarily in the banking sector. I mean, here in the US, you had the regional banking crisis, but we're also seeing on a global basis what's happening in the real estate markets, which is that they are starting to turn around and fall. And considering that globally, real estate is such an important sector in the global economy, what in the world is going to happen, next? Well, I think it's going to get a whole lot worse next. I mean, all they've succeeded in doing is in some areas shifting inflation so they can say overall, like in the US, we're at 3.2%. But what people on the ground now know, because of that huge rapid rise that we had in inflation, you don't see prices dropping. It's just the rate and speed at which they are going up. It's not as fast. But in general, globally, people, the general public, is really, really hurting from these massive price increases that we've seen over the last year or so.
Race to the pivot might be the wrong term, but, like, who do you envision pivot first? Maybe the EU, the US, because I think it'll have major implications on the currency as well, and just the trust in a certain currency there as well. What do you think?
Well, I think that in general, the public is losing trust in the currencies and in those that are in power. So if you're referring to when will they drop the rates, or who's going to drop the rates first, because I think we could well already be inside of a pivot where they've gone from raising rates to holding steady, but still keeping their options to raise rates again. But that's not going to fix anything, because we are at the end of this experiment's life cycle. And that's the part when you hear everybody talking about, well, this hasn't happened before, and this is really unique, and wow, we don't know how to deal with this. The real estate market's broken, this market's broken, that market's broken. It's simply because we are at the end cycle of a currency's life cycle. So just like a human that ages, I mean, they're born, then they have all this energy, and then toward the end of their life cycle, they start losing that energy, which I hope doesn't happen to me because I just turned 69 recently, and I still have tons of energy. But to make my point, you do not expect somebody that's 98 to have the same level of abilities and energies that you do that somebody that's 48 or 8 years old. It's going to be different at every part of the life cycle, and currencies and the markets on which they are based are no different. So who's going to start lowering rates first? Whichever economy goes into a massive crisis first. That's the one. Whether it's the US or it's Europe or it's anywhere else in the world, we have been going lurching really from crisis to crisis, and that's created a level of complacency in the public. And I think that's partly by design. But when you see really what's happening, what if they pivot? I mean, what if they just stay here for a while and then they start to drop rates? What is the implication of that? And that is that inflation on a broader scale and on a more rapid scale will shift and come back. So there's no way to fix this because we're at the end. And maybe you can explain to me how to go below zero in terms of purchasing power, because that's where we are. We're essentially, officially, we're at three cents out of the original dollar's worth of purchasing power. How do you go below zero?
Impossible. Or you just print your way out of it, and then you just, I don't know, if you create way too much money and it just happens.
Hyperinflation.
It's exactly it. Like Weimar 1920, late 20s, right? Or 1920s.
Right.
I have a $2 billion, $2 billion Reichsmark bill actually sitting here as well. So a vivid reminder of what could happen, right?
Here's a whole bunch of them, currencies that don't exist anymore. I mean, these still kind of exist for a minute, but I mean, 500 million, but can you buy anything with these? The answer is no.
Yeah.
So,
no, so since it's show and tell now, like I bought when I was in where was I? I was in Colombia. I bought a lot of Venezuelan money because that was just like $3 or something. I just bought it to put on the shelf. But let's see if the camera focuses on it. Right. So it's just Venezuelan money. That's just absolutely useless. It's actually they're making purses and stuff out of it now.
Right.
So, really good looking stuff. But
you could be a billionaire in terms of Venezuela, but what can you buy with that money? Big fat goose egg.
Exactly. Now, it's you talked about the markets or certain markets already being broken or breaking as well. It seems like there's a recession happening that is not being called a recession. We have a hard time putting labels on things to avoid headlines, I think. Like we talked, look at freight and logistics, for example. Commercial real estate, WeWork went bust. There's obviously
Shocker.
like, to nobody's surprise. I'm actually surprised it took so long.
Right.
But so there's an underlying problem that nobody really addresses. Is it just because we haven't put a label on it, or are we just sugarcoating it, or is the market so bifurcated that the positive signals overweigh the negative ones?
Well, I mean, again, I have to go back to, because this is something that I have studied since 1987. Do you know anybody else that has studied currencies and currency life cycles since 1987?
Not too many.
So, exactly. So if you're not looking in the right place, can you put a label on it? Yeah, it is the end of this currency's life cycle. But do I ever hear anybody say that? No. They'll talk about the death of the dollar, but they're referring to the status of the world's reserve currency. It's really simple. You have to get to good money because this fiat money is going away. And they can still keep dollars, and they will. They'll keep the name even when we go into the digital universe. but that's so people don't realize that the dollar is gone. And I am old enough to remember what happened in 1971 when we shifted from a quasi gold standard into a debt-based standard. Well, now the debt is so high, it is absolutely not repayable. And if this new system is going to be based on their ability, meaning government's abilities to create more debt, well, then that means that they have to get rid of this huge mountain of debt. And how do they do that? Well, the tried and true method is hyperinflation. And there is no doubt in my mind, but that we are clearly headed into a hyperinflationary depression because we're seeing signals that are occurring in the money supply and in different parts of the world that have not happened since the 1930s when they kicked off this grand experiment. That was the end of the first leg of kickoff, which actually began in 1913. So, and this is so interesting to me, but it seems to just kind of go over a lot of people's heads, is how many references when you're reading Main Street media, how many references they make back to 2007 and 8, which is when the system died, back to 1971, 1980s when the new system was kicking off, back to the 1930s when we went into that hyperinflationary depression. So there's a reason why they're referencing back to those periods of time, and that's because that's where we are. This system is dead. What are you going to do to protect yourself? For me, obviously, it's physical gold and silver, plus food, water, energy, security, barterability, wealth preservation, community, which is arguably the most important part of that, and shelter. Because these are all the things that we need to sustain a reasonable standard of living as we go through this reset shift into the next iteration.
Absolutely. I fully agree, actually. The question is now, is the US really willing to sacrifice the currency to get out of that debt cycle, right? Are they really willing to do that, or are they going down the pathway of Japan, that where they increase debt like crazy, going to 260% debt to GDP, but along the way sacrifice the currency? It's worth nothing. We all remember Japan used to have the yen used to be very, very strong, especially when I was a kid. I remember the yen was a major currency, but it completely got devalued. Looking at it just this year, the dollar to yen ratio has completely exploded as well. Is that a scenario? Is the U.S. really willing to sacrifice that world reserve status and its currency to resolve its debt issues?
Well, the simple answer to that is apparently so, because they've been sacrificing its purchasing power since the day that it was born back in 1913. Also, in order to make this shift, I mean, when you know that you're out of tools, when you know that you're near the end of the game, if you can game the system so that you make the shift and you remain in power, isn't that then the goal, right? So, I mean, these guys are not stupid. These guys, meaning central bankers, they know everything that I've told you, and they know a whole lot more. And they know a whole lot more than I do, honestly. This is where they live their lives. Well, what are global central bankers do but buying more gold than they ever have since they started recording how much central banks were buying? As my grandson would say. I mean, even if you don't understand it, all you have to do is look at what the smartest guys in the room are doing for themselves. So you might be saying, oh, well, the US hasn't added any more gold to their position. You know, who out there actually thinks that we're going to get the truth from any central banker? That would be a negatory. All you have to do is look on a gold market that is only physical, and so therefore a true supply and demand market, not the spot market that's based on contracts that are easily bought and sold cheaply, and it's not that big of a deal. But when you're looking at what the elites do, the one percenters that'll pay $15 million for one coin, that is at also all high records. All high records. Now, not the lower quality. This is not certainly an $8 million coin, right? And I'm certainly not saying that anybody out there needs to spend $8 million on a coin. But personally, that's the category that I want to be in, because when they change the laws and the rules, let me be with those that either write the laws or rules or can influence those that write the rules. That's where I want to be.
Actually, you mentioned a few things I really want to follow up on. Let's see if we can fit it in. Because you mentioned the bifurcation sort of central bank buying. We have the West sort of ignoring the fact that everybody else is buying gold, or the central banks are ignoring officially buying gold, while the East is all over gold right now. Thailand wants to back all of its reserves by gold. China, of course, nobody really knows, but we know it's the largest gold producer in the world, and they're not exporting anything. So obviously they're building up reserves. The question is, how much in total do they own? So why that bifurcation, West versus East? Like you say, the smartest guys in the room, it seems like the smartest people are not in the West right now.
I'd say that's probably been true for a while. But, I would also say that we are witnessing a shift in power, in financial power from the West to the East. Because the reality is he who holds the gold, or she who holds the gold, retains the power. So I think we are witnessing that, but whether it's China or it's the US or it's the EU or it's anywhere, do you really think you're going to hear the truth out of these guys? Because what if the US admitted to buying stockpiles more of gold? What if? What would that tell the population? Right?
Well, absolutely.
Their job is really public perception. It's really, do what I say and not what I do. And so what do? They lie and they lie. And when they're done lying, they lie some more, because their job is to maintain their power and control, make sure that their minions, the commercial banks, maintain their power and control, and that you volunteer it, so you can't point a finger and say, oh, that was the central bank, right? They need to keep you in these markets that are based on this stuff, and the only tool that they have left is this stuff, right? That's all they have. And every time they do that, what happens to this money that's already out there? It loses purchasing power. So how do you, again, I go back to, how do you go below zero?
Yeah, interesting. Lynette, like, you're the first person I have on the program who actually contradicts the U.S. statements in that regard. Like, everybody's saying, well, the U.S. actually, maybe there is no gold left in Fort Knox because we can't even inspect it, right? Maybe it might be somewhere else, but now you're saying the central banks might be secretly buying gold. It's interesting, like, that discussion, right? Like, because the official story as well, the official rumor is there is no more gold in the U.S. because we can't even go and inspect it. Like, when Germany tried to get its gold back and repatriate it, well, there was a big fuss trying to get that gold back. It seemed like people were scrambling, getting that gold back on a boat to get it back to Germany, right? Interesting. So I'm going to keep watching that. It's going to be top of mind whenever I open the newspaper now. Pay a little attention to the hints there.
Yeah, absolutely. And that's all you're going to get. And that's true for every central banker in the world. I mean, do you honestly think that there is an honest central banker that is really going to tell you what is going on? And that on a global basis, what the central banks did to manipulate the visible price of gold, and the spot market was really created to manage how we think about gold. You can read Greenspan's comments. It's not what's true that counts. It's what's perceived to be true. Actually, that was not, Greenspan didn't say that. That was Henry Kissinger who said that. And it's true. That is their job. So if they want to stay in power, why would they give up their gold? But God, that could be leased out. It could be hypothecated. In other words, used as equity or as collateral to take on more and more and more and more debt. But the problem with debt is at some point it needs to get repaid. And it doesn't matter whether you're a government, a corporation, or an individual. Ultimately, the laws of economics work the same for everybody. It's just that, hey, they can go back in and they can, from real money that you can't counterfeit, and those have tried, but nobody's really been able to duplicate this in a lab. Well, what they do, they counterfeited it with this crap, right? They're legal counterfeiters. That's what they are.
Absolutely, I fully agree. Lynette, there are two more topics I want to talk about. Is more the Fed buying actually treasuries now. We've seen that actually just yesterday, as we're recording this here on November 21st, the Fed bought over $5 billion worth of treasuries because apparently there was a bit of a shortfall during an auction. The question
Yep.
now is like, what does that mean? What is that implication? I hinted at the Japanese economic standards levels or even a Japanese blueprint to follow. Is that maybe the first stop or the first step in that direction?
Well, it's really kind of interesting because the whole world is following Japan's lead and they've created this whole alphabet soup of stuff that really, as we're sitting here now and looking at it, and this started back in the early 90s, it doesn't work. So I would say, yes, the whole world has been following that blueprint, but I think that it's really about keeping this together just in enough so that there is a massive crisis, people get scared enough, and then they accept this next iteration, CBDCs. So what just happened yesterday, what has really been happening since, what was it, I think 2000, is that the Federal Reserve has been buying Treasury debt. Now, suddenly, and that is not a good thing. I mean, that's what third world countries would do because there was not enough global buying of their debt. So, do I think we're following the path of Japan on a global basis? I have to say, yes, we are. But do I think that it's going to last as long as it has in Japan? No, I don't think so. I think that this is just a matter of getting all those pieces and parts in place and then having that forced, that controlled implosion. If they can force and control the implosion of the current monetary regime and then shift it into the new monetary regime, well, that's what they're looking to do. But we have choices at this point. We're not always going to have these choices. But at this point, we vote with our wallets, right? And if you buy gold and silver, which is what I'm doing, that's my vote. I am getting to safety. This is the key safety trade. Look at what the Bank for International Settlements says. I mean, they say that gold is the only, not one of two, not one of three, not one of 100, the only financial instrument that runs no counterparty risk. This crap is all based on the full faith and credit of the governments. So translate that, because I don't care whether it's dollars or Canadian dollars or euros, or it doesn't matter what it is, yen, it doesn't matter what it is. It's all backed by the government's ability to create more debt. And the solution to every single debt crisis that has come up, including right now, is enabling even more debt accumulation. Does that really solve the problem?
No, more debt doesn't solve the problem. It just makes it worse. It just makes it worse. Lynette, let me start my next question with a personal anecdote. I was at a dinner in Zurich last week and I've shared dinner with
You.
eight. Oh, it was fantastic. As part of the Precious Metals Summit, I was invited to I don't know, for lack of a term, a think tank dinner. And one of the thing, or we asked a question to the group, is like, what keeps you up at night? What are some of your fears in this market? And mine was that what we're predicting, what we are actually discussing, won't happen for a long, long time. We all see the indicators, we all see it happening, like the indicators like worsening, but it's not happening. If that makes sense, right? Like my worry is like, okay, like I'm talking about this, and I fully agree with what you're saying, but it might not happen for a while, maybe, and I'll end up in the loony bin because I've been saying this for almost 10 years now, and it doesn't become true. I've been predicting a market crash for 10 years because we've been printing money. I said, well, free money system, how does that work, right? It shouldn't, but here we are, 12 years later, actually, and it still seems to be working, right? So the next question is now, or it's a twofold question. Now, this is where the road sort of splits up. Is A, has the Fed created enough ammo or what was the metaphor is like reloaded the gun with enough bullets to sort of prolong the suffering, right? And B, are the CBDs, are that the solution, but that next step in reset? Like, is that the next step? Like, does that make sense what I'm saying?
Yes, it makes yes and no. Okay, here's where you hear my hesitancy. First of all we're seeing is the tip of the iceberg. There is so much that is breaking down beneath that system that we won't see until it's too late to do anything about it. So your nightmare of them having the ability to prolong it, I don't think you need to have that nightmare because unfortunately or fortunately, depending upon your perspective, we have been watching that lack in liquidity, like you said earlier, right? I mean, the Federal Reserve has been buying Treasury bonds since 2000, right? If there were enough demand out in the public, out in the globe, then they would not have had to have done that. And then in 2015, we had the first liquidity shock in US Treasury bonds, the 10-year bond. But since 2008, as witnessed by something that does not exist anymore, but I got a screenshot of this, you could watch the US 10-year Treasury market being handed over to traders. And that really happened, the finalization of that happened in 2013. And then in 2015, we had the first liquidity shock in Treasury bonds, and we've been witnessing that happening and the time frame between them growing shorter and shorter and shorter. So honestly, what keeps me up at night is not that this isn't going to happen for another 12 years, because it is already happening. And that's the piece. If they could keep it covered up, then even extraordinary people that are paying attention like you think that nothing is happening, thinks that they're holding it all together. But what keeps me up at night is that flippin' 10-year Treasury market, because that is the foundation of the global markets. The foundation is crumbling. When do you want to know about it? Because I've been working on my urban farm. I mean, do I look like a farmer to you? I mean, seriously, do I look like a farmer?
You clean up nicely.
I clean up nicely. Well, in reality, because of my studies of the economy, I was crystal clear in 2010, crystal clear that the system died. And it was then just put on this morphine drip, like a drug addict, and it just needs more and more and more. So it was 2010 where I was living in a little 2-bedroom condo getting ready to retire. And then I bought this, it's a half an acre in the center of Phoenix, and I became an urban farmer because food becomes the single biggest issue. Look around the world, we can see that. Food becomes the single biggest issue for most people during these transitions. So I did indeed become a farmer. And then in March and April of 2020, when you couldn't get toilet paper, you couldn't get food, right? Remember, the supply chains, boom, they broke. And I'm walking around my little farm going, okay, I've got chickens, I've got eggs, I've got animal protein, I've got vegetables, I've got nuts, I've got fruit. Aren't I smart? Aren't I great? And people were panicked. I had so much Jacqueline called me freaked out because she couldn't get toilet paper. I said, don't worry, I got plenty of toilet paper. But then there were riots near my home and riots near my children's home, and they live up in Scottsdale. And I thought, that is the hole in my strategy, because that night I slept in my bed with a gun, which is not really the way I want to live my life. So then I went out, and it took a while, but I found a bug out location. So and I've been working really diligently and hard on building up to support a community of 40. So, with all the things of the mantra: food, water, energy, security, barterability, wealth preservation, community, and shelter. So I would always rather be 12 years too early than 1 second too late, because it's taken me this long and I'm more prepared for a societal collapse than, frankly, probably almost anybody I know. Okay. So everybody thinks they're going to know like 1 second before, and then they're going to have time to buy all the gold that they want, all the food and water. And that's not the way life works. So I never care about being early. I'm a technician. I've been in these markets on some level since I was 10 years old. That is 59 years. Okay. And I got to tell you, I would rather be 20 years, 30 years, 40 years to think about this. When I first came to ITM in 2002, spot was trading at about $250 an ounce. Now it's somewhere near, 2000. What was the best time for me to be accumulating, right? So was I early? Do I care? Because if you think back to 2008, Shearson was my alma mater. That's where I was a stockbroker. And so I was watching that really, really, really closely. And I could not believe that they would have let Shearson go off and kick off the Great Recession. It was way more than that. It was the death of the current fiat system and the shift in the new one. So if you've accumulated gold and silver and you have all those other things in the mantra, that's what helps me sleep well at night. It's what's happening in the treasury bond market that people can't see because they cover it up. And even more than that, what's happening in the quadrillion, I can't tell you how many quadrillions, and nobody can, in the derivative market that's based on interest rates, which were held at those ridiculously low levels for 15 years, and all of the bonds that the banks are sitting on at 0% interest rates, bond principal, market value, that are in the tanker. So will they pivot and lower rates? Well, they're going to have to, because otherwise you're going to have the entire banking system collapse. And we just got a little snicker snack of that. Do you think that that's over? No. Do you think it's just in the local small banks, community banks? No. That goes to the highest level of banks, including the Federal Reserve.
$640 billion in unrealized losses officially, right? So just to throw a number in there. So
yeah, exactly. I mean, what would that do to the normal person?
Yeah, if you break that down, like what's the unrealized losses? Like the US has, let's assume 300 million, 350 million. Like you break that down, what's the personal, like that's the loss per person or per capita? That's insane.
That's the loss. And then on top of that, you have the debt, which is something like, don't hold me to this because obviously I don't have the numbers in front of me, but you've got those losses. And then for each person, each taxpayer or each person, not sure which, it's like we each owe $358,000 and growing and growing.
Good luck repaying that. Absolutely. Lynette, I have one more last question. I didn't know where to fit it in, but Argentina, I think, is the topic du jour right now, and the presidential election there. And of course, the big topic there, one of the campaign promises was we'll get rid of the peso, we'll reintroduce the US dollar as our currency. Based on everything we've just discussed, the US dollar and the currency going down the drain, why would they do that? What do they assume? Will they stop the de-dollarization process? Like, what's the impact? Is there any? Or is that just a drop in the bucket or just a drop on a hot stone?
Well, number one, because everybody's got to have a campaign, right? So, and the dollar, here's my hesitancy in that. What, the healthiest horse in the glue factory, right? So because of their inflation rate being so darn high and the dollars being relatively less than that, and people recognizing dollarization, this is about again, it really is all about public perception, because this is all a huge con game. So it's in relative terms when you hear the dollar getting stronger or weaker, or a country wanting to peg their currency or to the dollar, which is what you're talking about in Argentina. Well, then that means that their economy has to be managed like the US economy. So no pegs, none of that lasts. Look what's happening in the euro right now. I mean, that peg is definitely breaking down as well. So, the least sick horse in a glue factory. But if people really realize, and I talk to a lot of very brilliant people that certainly know a lot more than I do about a lot of things, but I don't think they know more than I do about currency life cycles. Because the answer, when I ask them specifically about that, the typical answer that I get from these very brilliant people, I can't knock them at all, is, oh, yeah, well, we know about that, but we just don't talk about it. Well, that's the problem, right? If we're at the end of this currency's life cycle, if we're dying and we're in hospice, and I'm sorry if that offends anybody, but that's where we are right now. You know that the time is limited. It's not going to last another 20 years. The system is breaking down too rapidly. It doesn't matter that the general public can't see it. It's designed to be opaque so that you can't see it, but we get whiffs of it with the regional banking crisis. We get whiffs of it with the crisis that's happening in the treasury bonds and what's happening in those markets, which are, you can't trade a large block of treasuries. You can't trade it. It is it may be the largest pool, right? But it is no longer the most liquid pool, right? What is the most liquid pool? Gold and silver secondarily. But gold is the primary currency metal, and I say that it is simply the most liquid thing on the planet because it is used in every single sector of the global economy, period, end of discussion, which means 100% of the time you have demand. That's why it has never, ever, ever gone to zero. There is absolutely, as you pointed out earlier, lots and lots of currencies that do and have gone to zero because this is just government money. This is universal money. This is universal money. When you're going into a knife fight, what do you want? Give me a bazooka. That's what I want.
Absolutely. Lynette, fully agree. And I do now have one last question. Does your magic 8-ball work?
Well, let's ask it. What do you want me to
All right,
ask
perfect.
it?
I have 3 questions prepared.
Okay.
A, is the US dollar going to crash?
You may highly, what's that say? You may count on it. You may rely on it. You may rely on it. It's
There you go. Okay, perfect.
Okay, you may rely on it. Okay.
There you go. That works. Okay, that fits the story. Next one is, are we going to see a gold price rally?
Come on. Okay, let's see. What's this say? Retry, hazy. Try again. We'll try again. Okay. My sources say no. So why would that be? That's what my sources say no. Why? Because a rising gold price is an indication of a failing currency. And the spot market is a contract market that was designed to manage what the public sees. So they want to keep the public away from gold while they're buying it hand over fist.
Or you just need news sources. One very last question. Should we abolish the Fed?
Outlook good.
I love it. I need to get one of those things. Fantastic. Lynette, I don't think I promised too much, and it turned into a really, really fun conversation. I really appreciate your
Absolutely.
time, Lynette. Where can we find more of you?
Well, we can find it, on YouTube. We're putting lots of things out, and as you mentioned, Daniela DiCamboni just came over to ITM Trading, and of course, we also, we have a whole roster of wonderful information on there. So just go to ITM Trading on YouTube, and also Beyond Gold and Silver, which is all about the rest of the mantra. So food, water, energy, security, barterability, wealth preservation, community, and shelter. And then, Twitter. I mean, I'm on all the socials, so I'm all over the place. All over the
Fantastic. We'll
place.
definitely link to all of them down below as well. Lynette, again, thank you so much for your time, and everybody else, thank you so much for tuning in. I hope you enjoyed this conversation as much as I have. Make sure to just hit the subscribe button as well, because I know 80 to 85% of you watching are not subscribed. Let's change that so we can bring guests like Lynette back on more regularly. We'd really appreciate it. And of course, what do you think is going to happen? Let's go back to the three questions I asked at the end. Should we abolish the Fed? Are we going to see a gold price rally? Is the US dollar going to crash? Be my magic 8 ball. Put that down below and leave your comments there. We really appreciate your time. Thanks so much for watching. We'll be back with lots more.